Hello, this is Cynthia Fick, and this is the May 20th stock market update. Wow, what a wild ride it has been over the last couple of months. It started with what I would call at this point, looking back, a black swan event. We had our normal healthy correction started, and then with all the tariff news, it knocked us into some of the worst consumer and investor sentiment we've had in 30 years. The S&P bottoming at about negative 18.9%. Then miraculously, it started to change, started to shift. They backed off the tariffs, and we had what looks like a truly a V-shaped type of recovery. We're almost like flat for the year now after falling that much. You may have noticed over the last couple of weeks that we've been putting some of the cash that we had raised for you back into the stock market, and I'm going to go over again why we decided to do that. And the first one is every time, there's been 5 times since the 1950s that the market has come down so quickly. It is always followed by just as quick upside bounce. So that is kind of holding true again this time. The second thing is the Zweig breadth thrust, hard to say, that I told you about a few weeks ago. And it's another rare indicator that just shows a lot of stocks going up on high volume. And it's so rare, again, 18 times since 1970, and 17 of those 18 times, the stock market is nicely up within a year, maybe not straight shot up, but it is nicely up in a year. So that happened 3 weeks ago. And then I'm going to show you a new chart that just adds to this conviction, in that this is the NASDAQ percentage of new highs and percentage of new lows. And you can see just recently it hit a NASDAQ percentage of new lows. It was at a high. So we had a lot of new lows happening in the NASDAQ. So that has only hit that level one time in 2009, ended up being a major low, and it hit again in 2020. And we know that was also a major low, and this is for the NASDAQ. So for that to hit a big time low and then bounce and go back up to percentage of new highs so quickly, again, it's only happened 2 other times in the last 47 years. And so here we have 2009 when it happened. This was the start of a major bull. And in 2020, when it happened again, that ended up being very close to the bottom and a major start of another bull. Again, doesn't mean we're going to go straight shot up. Doesn't mean we're not going to have volatility based on, never know what we might wake up and hear. But all these things are pointing to a very strong market that is now not worried about tariffs. It's focusing on 2026 and seeing very good things. Yesterday, we found out that Moody's had downgraded U.S. debt on fear of our growing debt. And the market it was almost a yawn event. It's almost as though the bond market people behind the scenes already knew we were not AAA rated. So those are just updates. And I will talk to you next Tuesday. Hope you have a great week. Bye-bye.